what a great day today. I love today. Had a good trade. Let's go over this. We're trading the silver gold spread and textbook spread action today. I got in a little late. I've been battling with a cold, so not usually smart to trade with a cold, but I couldn't resist it when I saw this trade happen. This is the trade. This is the silver gold spread, and look at this divergence. So price just shot down in the morning. Usually the silver gold spread is really active. It was really active from 2 in the morning. That's when London Open happened. So London definitely had some movement in the spread, a revaluation of either silver or gold. We don't know, and we don't really care. They were out of whack, and that's what matters about. So you can see typically here's the spread history, which is this green set of dots and the red set of dots again. And the value line is right here. So the value line is an important metric I use in determining support and resistance. So you can see that the value line level here was a good resistance. We moved down here. Had I been awake at 8 o'clock, like I said, I was knocked out. This is where I would have been buying, because look at this. We're diverging down, down, down the entire morning. They flatten out, so we're putting a bottom in. We're way below the volatility bands, which are these gray and green bands. Volatility contracts up into here. You can see that because the volatility bands get much closer to the value line. The expectation is really upwards from this, let's say, 5:15 time right here, all the way to the end of the day. That's what our spread has been doing historically. Man, what a perfect setup. So you can see what I did. And I'll go through a play-by-play, but here we go. So I bought here right at the appearance of the cycle doubts here. I bought again because the bottom was putting in here again, and then we exited on the way up. So let's go ahead and take a look at a play-by-play. All right. Here we go. So this is our first position was already in. We were in here. I went in again. You can see a blue buy signal on the silver chart up at the top. So we went in here and here. Our average position was at the negative 69,870 level, and look at that. We found another bottom. We hammered out a bottom, broke above in a classic bottoming pattern, 1, 2, 3 pattern above the fast moving average. And my target is always the midline. So I have just seen the value line be resistance. So when you're below it, that's where you want to get up. So I put a stop actually a little bit this side of the value line. And we went and rode it. So we're at 370. I put a trailing stop in the money here as we approached a little bit higher. I also exited one contract. Since I was long 2 spreads, I exited 1 spread right here, and I banked 165. This is a zoom out, so we're looking at a little bit larger picture. We went and bought one here, bought one here. I exited the spread there, and we're still in the money. We're up 410. So this is the one I exited. I moved my trailing stop up here below the swing low of that move. Cycle dots were starting to print, so I was preparing for a reversal down, but you know what? With that spread line, just the spread history just moving upwards, I didn't really have any problems. So I already locked in profit. Continued moving up. We're up 625 at this point. I moved my trailing stop up a little bit more, and right here is where we exited out. So we hit target. Look at that! Just a rocket shot right into that target. And actually, you know what? We could have held on for a little bit more. The spread, this is where we exited, but we did see more of a follow through. Again, I like to think of this as the ceiling. You know, if we're below the value line, we're going to stay there, but we're going to come back to it. So this is the value. This is where we started the day in London. And after the craziness of day of trading, the spread difference comes back to normal, quote unquote normal. So very excited about that trade. We nailed it. All right, so this is the soybeans corn spread. So we're long soybeans, short the corn. So it's ZS minus ZC. And actually, the V-dollar ratio is a little bit awkward here. So if you wanted to get a little bit more adjusted, you would go one contract of the soybeans and then minus 1.9 contracts, which rounded up to 2 for whole numbers. So it would have been +1 -2, but I stuck with +1 -1. And what I like to just point out here is that I like to look for a retrace during the open to the value line. So again, the value line is right here. The spread moved up and touched the volatility band. And the volatility band shows where 80% of the prices move during that segment of time during the day. So historically, the close price of the spread is right around that line about 80% of the time. It's at that level or below. So it's within this zone 80% of the time. 20% of the time it's above that. We don't know how high it is above that, but 20% of the time it's above it. So that's our volatility measure. And we retrace right back to the value line. This is a classic agricultural move I've seen, and I would have been a buyer here. I wasn't watching it at this time in the morning. Again, I wasn't around, but when that happens, you're buying and then you're exiting at one of the volatility bands. So there were 2 opportunities to exit here, and that would have been a great trade. Let me show you the one I missed, the one that got away. All right, so this is the one from 11 o'clock on the 6A, 6N spread. And I saw this coming up near the top of the value area. So these blue dots here are the value area of the TPO histogram. Yellow dots are the outside of the value area. So the idea with a value area is you expect this to come back and forth and range in the value area. This dotted line is my short order. So I actually put an order up here, and look at that. It's just never quite filled, but this was a great trade down to the value line here. This is an excellent high correlated spread. The correlation here is 61. I don't know if there's a spread more highly correlated than that. And this is on a 10-minute bar. And what the correlation means is that if you take 10-minute candles and you line them up between these 2 instruments, how often do they move in the same direction? And that's a correlation factor that we use there. So this spread moves together very closely. Not 100%. Nothing does it 100%, but this is a trading edge right here. So normally you want to trade, you want to go short at the volatility levels. Again, volatility bands, 80% of the prices are contained below it. 20% of the prices move above it. 20% of those prices historically. So, you know what, I just got a little squeaky. I didn't want to enter at that red level. So I was getting a little stingy, and I never got filled, but it definitely moved down. This is a $50 grid. So this yellow area is $50. This is $50. So it's a $100 move on one spread. Would have been a great trade. This is the milk run spread. So, all right, that's what I had for today. Hey, you guys are awesome, and I'm so thankful that you're joining me. I hope this little walkthrough has been helpful. BOSA is a dynamite indicator. Okay, we're looking at spreads. We're looking at ways of taking no heat on trades and reducing your reliance on stop losses, making a difference in your bottom line, and getting an edge, finally a tradable edge that makes sense. And that's trading correlated instruments together and keeping the risk low. That's the key. That's the key here. Thanks again. Have a great day.